What's going on, Bullish Bears? Today we're going to be talking a little bit of trading psychology. We're going to be going over the book The Daily Trading Coach, 101 Lessons for Becoming Your Own Trading Psychologist by Brett N. Steenbarger. And this is really important for us, especially as retail traders, because most of us, we're trading as a second job, or we're doing just trading on the side or trying to trade at work or what have you, and we don't have a coach or a mentor or someone that we can go to one-on-one that can kind of help us with our trading psychology and making sure that we have kind of our mind right for trading. And trading psychology is incredibly important in trading, because if you don't, or if you're not in the right psychological mindset, you can actually have a strategy that is proven and profitable, but if you are not mentally stable enough, or if you are not aware enough to implement that strategy correctly, you could be losing money. And I mean, you'll see as we go through these videos that there's a lot of things that we do as traders that we blame on the market or that we blame on our strategy, and it really isn't either of those things. It's our trading psychology. It's the way that we are viewing ourselves and the way we're viewing our strategy. So these videos are going to happen in a couple different parts. Today's part one. And so we're going to be talking about change, because the basis of being your own trading coach is change. It's the process and practice of what change looks like, what change feels like, embracing change, and getting comfortable with change, right? So the first part of that is drawing on emotion to become a change agent. And we know that successful trading requires change. It requires a change in our habits. It requires a change in our mindset. And we know that the key to successful coaching is turning change into routine, right? So having an idea isn't enough. You want to have an idea, find ways to implement it, make it stick, and that way you turn those behaviors into second nature things that you're doing. So tell me if this sounds familiar. So maybe you've told yourself you need to follow your trading rules, that you need to trade a smaller size, or that you should avoid trading during certain market conditions or times of the day. Yet you still keep taking those trades, you still keep losing money, and your frustration keeps building. Why? Well, it's because you're lacking the emotional force behind a change. So knowing that you shouldn't trade at noon because everyone's at lunch and there's low volume in the market and low volatility in the market isn't enough. You need to have an emotional force behind that change to cement that change and sustain that change. Now, as traders, there are two ways to experience emotional change about your trading. The first is unfortunately the most common way, but it's the hard way, and that's through a large scale emotional trauma. And that comes through, I tell traders, that happens in your first trade usually, right? So you watched a YouTube video, probably a buy low sell high video, and then you read the first chapter of Trading for Dummies, and you went out and you opened an account, you put $500 in it, and you bought into some stock, right? Usually it's not a good stock. It's like Top Ships or something, right? So let's say you buy $500 of Top Ships and you lose it in 35 seconds. And you say, whoa, I don't know anything. I just got rolled. I just blew up my trading account. And so I need to go back to the drawing board and I need to learn a little bit more before I put any more money in the market. That's a large scale emotional trauma. While that is a very effective emotional experience to power change, it's not one that we enjoy experiencing, right? So the goal is to try to learn emotional experience to power change the easy way, which is through incremental disciplined growth. Okay. Now, how do we create healthy emotional experiences as traders? How do we create that incremental growth? Easy. We set goals and we work towards our goals. Now, every trader should be working towards goals continuously, regardless of profitability. So if you're a trader that only has $100 and you're starting out on your account, or a multi-million dollar trader, investor, you should always have goals. You should always be working towards your goals, and you should take every opportunity to learn and develop yourself. That is very important. Okay. Now, when it comes to setting these goals and working towards these goals, you have to make sure that you're setting them daily and that they are achievable goals. So you want to make sure that you're building a strength, correcting a weakness, repeating a success, or avoiding a past mistake. That means specificity. So that means that it needs to be something that's in your control. Most traders, when you first start and you ask them, what is your goal? They say, oh, my goal is to make money. that's too large of a goal. There's too many. It's too vague of a goal. There's too many things that go into that. You have no control over whether or not you make money. Now, you do have control over the size that you take in a position. You do have control over the times of day that you trade. You do have control over the types of entries that you take and the types of exits that you take. So those are the kinds of achievable goals that you want to be setting. You want to say, tomorrow I'm going to make sure that I only buy after a candle has fully formed rather than in the middle of a candle. Or I make sure that I only buy at this specific type of pattern. That's something that you have control over, and that will work through one of those four things in your strengths, weaknesses, repeating a success, or avoiding a past mistake. And then eventually, small emotional powered goals become large scale successes, right? And then more importantly, the more you start to succeed with these smaller goals, it begins to turn your goals from or into needs from wants, right? Because something that you want may not necessarily you may not necessarily sustain, but something that you absolutely need, right? Something that you absolutely need, you will do every single day, and you will make a part of your life so that you can be successful. All right, so now that we understand how to draw on our emotion, the next part is psychological visibility and your relationship with your trading coach, which is you. Okay. Now, we understand, or we've gone over emotion. Now we need to effectively understand how coaching works in order to put the two together so that you can help yourself. So, we know that good psychological coaching requires a relationship built on honest connection, right? It's the relationship that matters between you and the person who's coaching you. So, when you think back, I mean, it can be anything in sports and life, what have you. When you're taking advice from someone or when you're being coached by someone, you want to make sure that person understands you, that person makes you feel valued, that person can connect with you. And more importantly, when you're talking about things, because as you're being coached, you are expressing all the good and bad things about yourself, right? So you want to make sure that that person isn't making you feel unappreciated, that they're making you feel seen and heard, that the things that you're saying aren't just falling on deaf ears, right? Now, as traders, most of us don't really know what we do best, especially when we're first starting out. And when we try to evaluate or coach ourselves, we realize that we're invisible to ourselves. So something that's very important is you have to make sure that you always have your values, your dreams, and your strengths at the forefront of your mind when you are attempting to analyze yourself or to coach yourself, right? Because you will see that you have these ideas, but then through your action, you realize that who you are and who you want to be isn't, or who you think you are and who you want to be isn't always who you actually are. And so you want to implement that change of who you want to be over who you are, but you have to make sure that you are staying visible to yourself and keeping your goals and your strengths and your ideas in play at all times. So we ask ourselves, how can we coach ourselves to success if the very strength that would bring us success are invisible to us? That is when we talk about the process. When we talk about the process of setting goals, when we talk about the process of dissecting things and looking at things outside of ourselves. That's how we find those strengths that may be invisible to us at first, but will slowly move to the forefront and make themselves present, right? Because to self-coach, we must be visible to ourselves and sustain the vision of who we are and what we value. This is sometimes very difficult to do because in the moment when we're caught up in a terrible red day or we're caught up in emotion or panic, we tend to get tunnel vision. And so you always want to make sure that you are paying attention to not only what your overall goals are or what your overall vision is, but what you're doing in that moment and how you can help yourself work towards that. Okay? So these are all fun, broad concepts, but you say, okay, how do I do this tomorrow? If I wanted to make a change towards this tomorrow, how do I do that? Well, what you want to do is you want to identify a single trading strength to express as a goal for the coming day's trading. So you want to look back and say, I did this really well yesterday. Yesterday I made a trade and I did XYZ. I obeyed, let's say you have a ride the nine strategy. I obeyed my nine the ride strategy really well yesterday. And so tomorrow I'm that's what I want to do. I want to make sure that I'm watching that 9 and I want to make sure that I'm doing everything I can to obey that strategy again. right? And so doing that day after day brings those goals forward, brings those strengths forward. And doing this, what it does is it affirms your competencies and keeps them visible even during challenging market times. So when you set these goals, you can work towards these goals literally anytime, whether it's a good market, bad market, choppy market. Obviously the goals will change, but if your goal is something like managing an entry price is something that you can work towards, that is a goal you can set, work towards, and succeed at regardless of what the market is that you're trading in, right? And we know that the best successes are achieved when goals are linked to those values and express distinctive strengths. Because when we set a goal and we see ourselves working towards it and then accomplishing that goal, that creates positive visibility within ourselves. Make friends with your weakness. Now, this is something that can really be a challenge, and if you're not viewing it correctly, can be a trap. Okay? Because the notion of change itself creates division, right? Because when you want to change, in order to know what you want to change, you have to divide yourself up into things that you like about yourself and things that you don't like. And the things that you like, you're okay with, and the things you don't like are the things you want to change. So what we do when we want to change is we label our strengths and weaknesses as good or bad. And because we're human, we tend to embrace the good, and then we completely turn a blind eye to the bad. And then every time something happens that plays into our weaknesses, we write it off as a mistake, as bad luck, or as an exception. How many times have you heard somebody say, "Oh, I've had a red day, but it was the market"? A lot of times when you have a red day, it's not because the market wasn't doing anything outside of the norm, with a few exceptions, right? Um, it's that you missed something, your risk management wasn't there, you got in too quickly to something. So that is plays into your weakness, and that's not necessarily the market. That is mismanagement of a strategy. And the problem is that we don't sustain the motivation to grow because we tend to only focus on the good things, right? So we think if we have our strengths pile and our weaknesses pile, we think if we reinforce our strengths enough, the weaknesses won't matter because the strengths are these whole unbroken pieces of ourselves, right? And that's not necessarily the case because it doesn't matter um, if your green days are outweighing your red days. If you go back and you confront your red days and you dissect your red days and you confront your weakness, I guarantee you can start eliminating the amount of red days that you have. Okay. Now, this is not just positive thinking, because the problem is that positive thinking tends to leave you mediocre, because the idea of quote unquote positive thinking is only focused on the happy thoughts. And while um, you should encourage yourself and stay positive, you don't want to only focus on the happy thoughts because you learn more about yourself through your weaknesses than you do your strengths. So here's an example. So let's say you're in a trade and you mismanage the trade because you got frustrated, right? And you completely blow through your max loss because you're being stubborn and you're frustrated, and you end the day red. So you say, "Oh man, bad red day, I'm going to turn the computer, walk away." So you walk away. Then fast forward to the end of the week and you realize that your P&L on the week was flat, right? So you had a terrible red day on Wednesday, but throughout the week you came out even. So you tell yourself, right, because you want to try to stay positive, you say, "I didn't really lose any money because because my weekly P&L was flat." Well, in trying to make yourself feel better, what you've done is you've written off the loss and then forgotten about it, and in turn, you haven't learned anything from that mistake. So rather than diving into it and confronting it, you kind of swept it under the rug. And now, the next time you get frustrated, you're going to make that same mistake again, but this time you lose double because it's a larger trade or it's a bigger swing or what have you. When if you would have confronted that weakness when it happened last week, you wouldn't have had a loss last week and this week. You would have only had the loss last week, right? And so that's why this danger of positive thinking, that's where it presents itself, right? Because positive thinking is a denial of weakness, and that's not what we want to do as traders. We don't want to deny our weaknesses. We want to acknowledge them, engage them, and then grow through them. So your weakness is a part of you, therefore they are a part of your trading. Like I said, you will learn more about yourself on red days than you will on green days because every losing trade is there to teach you something. So the way you want to do that is when you have a bad day or when you're looking at a bad trade, you want to do it in three different ways. The first thing you want to do is describe the losing trade you made. Now this can potentially be a very long description because sometimes our bad trades don't necessarily have everything to do with the trade itself. Maybe you woke up tired, maybe you weren't feeling it, maybe you were distracted. That has nothing to do with the strategy. That has to do with how you were feeling in that moment, right? So you want to describe the losing trade you made in detail, and then you want to point out what you can learn from that losing trade, right? So now you're dissecting it and picking apart how your weakness affected you, okay? And then you want to improve your trading on tomorrow based on what you've learned. So you've outlined what happened, you've picked it apart, and then you've set yourself an actionable goal for what you want to do tomorrow to make sure that next time this happens, you're going to react differently or view something differently so that you don't end up in the same place that you were today in the trade. Okay? And this is huge when you start to realize that your biggest opportunities will come in adversity. When you're sitting and you have all of your weaknesses shoved in your face on a terrible red day, that's when you will learn the most because you will have the most amount of information to dissect and to pick apart about yourself. And all of this is going to um, happen in a trading journal, right? You want a daily trading journal because that will expose all of your weaknesses to you, and it's something you can go back if something happens and you're hot-headed about it and you journal and you still don't feel like you're okay with it. You can walk away and you can come back and you can reevaluate and you can reevaluate over time and you can compare over time, and that helps you turn um, those opportunities from negative experiences into growing experiences, right? Because you make yourself stronger when you reach out to your weaknesses and you engage your weaknesses. Change your environment, change yourself. Now, as humans, we experience different personality traits and different ways of thinking depending on the environment that we're in. It's the same way how you can have somebody who acts one way at work and then one way at home and then a completely different way at your in-laws house, right? So your environment directly affects the way that you are thinking about a situation or the way that you are working through a situation. Now, if our goal is to change, and the greatest enemy of change is routine, then we want to make sure that when we feel ourselves getting into routine and taking on traits that are unhealthy because we're in a routine, that we kind of flip it on our head, right? So in familiar environments, routines, we operate on autopilot. Nothing changes. So the same things that you have always done, you will continue to do in the same type of environment, and it's very difficult to change anything or to bring anything new on board because you want the same old habits all the time. And when we lapse into routine and put our brains on autopilot, we're no longer fully actively conscious of what we're doing and why. And trading is huge in this. You want to be actively conscious and involved in what you're doing, keeping your overall goals set for yourself, and making sure that you are fully aware of what you're doing in the moment at all times. And when you act as your own trading coach, your challenge is to stay fully conscious, alert to risk and opportunity. So that means that you as a retail trader, during the day when you're trading, you're going to be making mistakes or what have you. And then at the end of the day, when you are reevaluating everything, when you're tired or when you want to put your brain in autopilot, you have to make sure that you don't allow that you go over everything with a fine-tooth comb and you stay completely aware of your goals and everything that you're trying to accomplish as you're going through and reviewing your day. And we know that life is full of repetitive patterns. We gravitate to the same thoughts, feelings, and behaviors, and that happens in the routine, and that happens in the autopilot when you do things. When you're driving to work and you don't even realize that you have been driving because you're just living your life, right? And so if your environment is comfortable, it probably isn't conducive to change. Now, I will mention this. This doesn't necessarily mean your physical environment. It can mean your mental environment. Um, it could mean your emotional environment. So just keep that in mind. So a couple different ways that we can implement change in our trading environment, right? So you want to seek out different views, which means having conversations with traders who trade differently than you, reading materials from fresh new perspectives, read up on other trading strategies, and these things will help either you to grow your trading strategy and add to your trading strategy, or it will reinforce why you don't do certain things um, in your trading strategy because they either don't work for you or because you don't like them or whatnot, right? So the other thing you want to be doing is you want to make sure that you're examining the big picture. So everything you do is connected. You never want to trade with blinders on. You never want to trade in that box, which is really important, especially if you are a day trader, right? Because most day traders, because they trade on smaller time frames, they get stuck in the 1 minute and the 5 minute. You want to make sure that you're viewing the macro as long with the micro, okay? That you are seeing 30-minute, hour-long, monthly, weekly, daily trends, okay? Because that will change. That could potentially change the process of what you're thinking and what you're doing. Because some of the best trading ideas start with a big picture view and then proceed to shorter term execution. Another way is to examine related views. So when we see this a lot in sectors. So sometimes one stock moving will affect other stocks moving. Sometimes that's the only catalyst, right? So sometimes you say, I've been watching this stock for forever, and there was no news, there was nothing today, and then all of a sudden it went through the roof because another stock in that same sector moved on news or something, and that influenced it, right? And when you're looking across all your instruments and asset classes, that keeps you from getting locked into those blinders and into that tunnel vision of, oh, this is what's worked for me, and this will always work for me, and I don't need to learn anything new, right? Because seeing everything helps you continuously compare and reevaluate, right? And then lastly, it's really simple, but it's really, really effective. You gotta be able to take a break because trading can be really addictive. So you can't be afraid when you're frustrated or when you feel like you're not clicking, just get up and walk away. You know, the best the best way to avoid a red day is to turn the computer off and walk away when you feel like you're not yourself, when you feel like you're not thinking straight, right? And I mean, I know I've done it. 24/7 technical analysis. Oh, the market's closed on the weekends, and I'm not trading today, so I can spend a couple hours, looking over things. You got to give yourself a break. You got to let yourself enjoy that time off, so that you can give your mind and your body some time to rest. So that when you come back to the computer on Monday morning, you're thinking clearly. So basically, it's the mental routine and environment that we need to change to break unwanted and unprofitable patterns of thoughts and behavior. So for some people, it is a physical environment, right? So when I was first starting out, I had a full-time job, and so I was hindered by my physical environment because I was trying to trade while at work, and that's obviously gonna not be okay, right? I'm not thinking 100% on my emotional state, and I'm not thinking 100% on my trading strategy because I'm trying to do my other job while I'm trading. Um, but then for others, it's that mental routine of being exhausted or being angry or being frustrated, right? So these are the things we want to be aware of. Transform emotion by trace forming. So when it comes to your emotions, every trader has some type of emotional state that they're struggling with, right? Because we're human, so we all have our flaws. So for some of us, it's anger, some it's frustration, some it's anxiety, some it's doubt. And then when we get tripped up by these emotions, we want to change how we feel in the moment or how we feel about things, but a lot of us don't know how to do that, right? So you say like, I'm impatient, and when I'm impatient and things go bad, I want to stop being impatient, right? So our traits and temperaments affect how we experience the world, which will affect the way you see things and the way you take in experiences around you. But what people fail to realize is that our traits and temperaments are also a really important play a really important role in defining the range of our emotions. Okay, and much of our emotional experience is hardwired. It's things that come from childhood. It's things that come from upbringing and our interactions with others. So it's not really something that we can completely change, right? So if we can't change our personality, what can we do? We can change how our personalities are expressed, right? So you can feel that anger, you can feel that frustration, and you may not be able to help that initial thought, but whether or not you let it take over your thought process and take over your mindset and change your reasoning and your rationale, that you do have control over. So we've seen, over the years, over time, that you can't control feelings with thoughts, right? So asserting a logical reality ignores the personal meaning and significance of the situation. This is why when somebody's having an anxiety attack and you tell them, calm down, you're safe, there's nothing to be freaked out about, that does absolutely nothing, right? Because feelings can't be reasoned with, but something that's very important is that all feelings contain information. So you may be feeling something and you may not be able to control how you're feeling, but you can interpret the reason why you're feeling that and the information that's being given to you by that feeling. Okay? Because emotion is an essential component of rational decision making. Okay? So when you feel an emotion, your brain will interpret that, and then your brain has to reason with that emotion to create next steps. And we know that when the brain is damaged and becomes unable to engage in emotional processing, the result is profoundly distorted behavior. So if you're feeling something overwhelming, if you're feeling like you're drowning, if you're feeling like you can't breathe, if you're panicking, you know that the information that is contained in that emotion is overwhelming your brain. So you know something's up. That's a red flag, right? And then rather than suppress the emotion, what you want to do is give it full acknowledgement and then start picking apart what you're feeling and what information is contained in that emotion. So we know that writing in a journal or talking aloud for half an hour a day has a powerful effect on enabling you to cope effectively with challenging emotional circumstances. So you need to be able to kind of get it out so you can hear yourself speak or hear yourself think, right? And when you fail to acknowledge emotions, you lose the information that's provided and the opportunity to shift perspectives. Now, the main example of this as traders is not fighting the tape, right? So you see a trade and you get into a position and you tell yourself, okay, this is going to go long, and then price starts to drop. And then you get frustrated and price starts to drop even more, and you get more frustrated and price starts to drop even more, and you get more frustrated. And instead of saying, wait a minute, why am I getting really frustrated? I'm getting really frustrated because price action is going against what I thought. So maybe I should reevaluate, and maybe I should stop out, or maybe I should reverse my position if this is actually a downtrend instead of an uptrend. So instead of picking apart what you're feeling in that emotion, instead you dig your heels in and you say, "No, I'm gonna average down," or "No, this has to go up. This has to go up, or this I have to be right," is the sure way to lose money, right? So we see this all the time when traders fight the tape, and they don't realize that they're you know drowning until they're all the way at the bottom. Now, acknowledging your emotion is different than enabling it. This is really important. So, what you don't want to do is you don't want to just vent, okay? You don't want to engage the emotion in the direction that the emotion is moving, because then you become comfortable validating that emotion. Okay, so if you're angry, um, you know, getting up and leaving the house and going to get a coffee at Starbucks and screaming at the barista is not a proper use of um, that emotion, right? You want to try your best to reason, calm down, and to try to figure out what that emotion is telling you, right? Because the idea is to transform feeling, not ignore it or revel in it, right? So it's kind of it's a fine line to walk, um, and it's something that's going to take a little bit of time to figure out. It's something that you have traders that are practicing this type of emotional mindfulness for years and still don't have a hold on it, right? But it's just something that you want to be aware of. So ideally, your goal is to achieve calm focus during periods of high frustration or discouragement. So really, you want to be not letting these emotions affect you deeply, and try to stay as calm, cool, and collected so you can think clearly, right? And then obviously, like I just said, this takes practice, right? This is not something that you're going to get overnight. This is not something that you're going to get in a month or two. This is something that's going to take some time, right? So something that kind of helps a little bit that we realize is those times when you revenge trade, or when you know, double up on your size, or you do something dumb, we see that most of the time it's when you have, so let's say you take a piece of paper, right? And if you were to draw two thermometers on a piece of paper, and then you gauge yourself, every 20 or 30 minutes throughout the day on how you feel. And one thermometer is a frustration thermometer, and one thermometer is a confidence thermometer, right? So we realize that when we are experiencing high levels of frustration and high levels of confidence, we do something stupid, okay? Because if you're feeling a high level of frustration and a low level of confidence, you're less likely to take a trade because you're recognizing that you're frustrated, but you're not really feeling like you can do anything about it. So you're less likely to throw yourself headfirst into a trade, right? Now, if you have a high level of confidence and a low level of frustration, the chances that you're thinking clearly and you're rationalizing through your trade are very high, because you don't really have anything distorting your mindset. But when you are incredibly frustrated and incredibly confident, that's when you do something stupid, like quadrupling your position size at the low or the high, whatever it is, that kind of thing. So you want to be continually taking your emotional temperature throughout the day to kind of measure where you stand on that frustration confidence scale, um, because that'll kind of give you a little bit of insight into how you're thinking at the moment and your chances of doing something that you're going to regret in a trade. Find the right mirrors. Our self-confidence and our self-image are directly correlated. So the way we see ourselves directly affects the way we feel about the way we act every day, right? And every experience we have serves as a psychological mirror. So every interaction that we have with the world around us or people around us throws back at us what we are putting out to them. Okay? So if we see ourselves reflected in the impact we have on the world around us, then that impact is significant to who you are as a person, which then influences your self-talk, because your self-talk, which either hinders or hurts you, is born of life conversations. We internalize the voices from significant relationships, which is why we see a correlation between like children who are abused who then grow up and land in abusive relationships, or insecure people who land in insecure marriages. Okay? Relationships are our most powerful psychological mirrors, but they are not the only determinant of self-image. So these relationships take up a large part of who you are, but if you're trying to grow and you're trying to learn, they don't take up everything. And trying to grow through a new process, you still have some control over that growth process and over that learning process. So everything we do is a psychological mirror. A good example of this is, let's say you have an activity or some work that you have to do that you hate doing, right? And when you do it, it just makes you frustrated. And when you're done, when you're finished with it, if you finish it, it usually leaves you feeling inadequate, right? But then if you have work that you love doing, you can do that job for, 12 hours a day, and it makes you feel satisfied and fulfilled and self-confident when you're finished with it because you love doing it, right? So the best work speaks to our interests and values, and it matches our abilities with strengths. So what you want to do is ideally you want to align all those things, your values, your abilities, and your strength into uh, your process of work, because that will ultimately give you the best self-confidence and the best reflections psychologically of yourself. So performing efficaciously is work that's important to us, and it generates mirror experiences of competence and work. Now, efficacy is when you set a goal and you can visualize yourself working towards that goal and completing that goal, right? So that goes back to the difference in the work that you hate or um, work that you love, right? Because if you notice, work that you hate, if there's something that you hate, it's probably because you think you're not very good at it. And if it's something that you love, it's because you think you're great at it, right? It doesn't necessarily mean that you are good or bad at either of those things, but it's the way you see yourself setting that goal, working towards that goal, and reaching that goal. Okay. So a large portion of your success, especially in trading, is finding the right mirror, is finding interactions or creating interactions that will reflect back to you positively and help you grow and help you understand that efficacy and find success in the direction that you're trying to find success. So when you're self-coaching, you want to structure your learning and development so that trading itself becomes an experience that mirrors your growing confidence and competence. So that includes keeping a daily trading journal, right? And then make sure you include positive notes and not just negative ones. So if your trading journal is nothing but I'm such an idiot because this trade went against me and I lost money today, or I'm such an idiot because I didn't see this thing or I wasn't paying attention to this, that's not a good thing, because what you're doing is you're just, every time you read that journal, you're reflecting negativity back on yourself, right? So you don't want to let your self reflection turn into self criticism, because what then happens is over time, constant self criticism will reinforce a sense of incompetence and failure, right? It removes that efficacy, because self confidence is, or self reflection and self confidence is you setting a goal and visualizing yourself reaching that goal, right? And self-criticism is you setting a goal and then seeing yourself never being able to reach that goal. So positive mirrors consist of outlining structured pursuits of goals. This is why the incremental small growth that we talked about, this is why this is so important. So you create a challenging, meaningful, doable goal. You work towards that goal. You complete that goal. It reinforces a good self-reflection, a good a good sense of self-confidence, and that is how you grow, and that builds upon each other, right? When we make goals, setting on ongoing features of our self-coaching means we continually construct opportunities for powerful, self-affirming emotional experiences. And that's important. Self-affirming emotional experiences are what's going to help you sustain that growth and sustain that success. So your goals should set yourself up for success and a building of confidence, right? So how do we do that day to day? So each day in your journaling, include a specific goal and work on that specific trading session, right? So you list concrete actions that you can take to achieve that goal. So this is why we talk about these goals should never be a profit target, okay? Because concrete actions are something that is always within your control. So if your goal is, I want to make $1,000 a day, or I want to make $500 a day, there are so many things there are so many moving pieces to that goal that you have zero control over. So you're not going to be able to successfully build that trail of efficacy, right? To see yourself completing that goal. Now, if you have a goal that says, you know what, today I'm going to make sure that I wait for trend confirmation before I jump into any kind of trade. I wait for all candles to close, right? So I'm not So I'm not buying in the middle of a candle and I don't really know how it's going to form because I want to read candles, or I want to wait until the pattern completely forms and I know what's happening before I put my money in. Those are things that you have complete control over. And that's a goal that you can set so that when you go back and you evaluate yourself, you say, hey, I told myself that one of my goals was to not buy until you break the dollar mark or you break the quarter mark or what have you. And I held out. I wanted to, but today I held out and I waited until price crossed the dollar mark to make sure that I wouldn't get stopped out, or I made to make sure that it wouldn't reverse on me, and I did that. And that's a great concrete goal with concrete actions that are in your control that will help build that self-confidence. And as you engage those things, every effort that you expel out into the market then will be reflected back towards you in a positive way. Not that it will necessarily be a win, but you can look back and you can say, okay, my actions were concrete, I had full control over it, and what I got back was a reflection of what I put in. So it's not enough to set your goals, but you have to have a way to track progress towards those goals, right? So a lot of traders only trade or only journal when they're on a losing streak. You want to make sure you're journaling 24/7 because in order to set those goals, if you think back to the beginning of the video, we said that a large portion of that growth and change was not just avoiding a weakness or correcting a mistake, but it was also recreating a success, right? So how do you know what your successes are and how to recreate them if you're not also journaling in good times, on good days when you did something right, okay? Because really, trading is not about making money. It's about creating experiences that'll sustain your sense of competence and confidence. And what happens is when you stack enough of those experiences, right? So you say, I've correctly built my confidence and I've correctly built a strategy. And so good confidence, good self-image, level head, and good strategy, if all those things are in line, the money will come. So it's not, when you focus too much on the money, you're not focusing on what's really important. Change your focus. This is kind of fun because it gives us a catchphrase. If you wish to change the doing, you must change the viewing, right? So this means sometimes we overreact to market information because we're too inside our own heads. Okay, so you can be in denial about a trend, panic buying and selling. I feel like panic anything. If you put any action in trading and you put the word panic in front of it, right? That's never a good thing. Or second guessing yourself, second guessing your entry or your exit, right? So many traders' problems show up in how they handle opportunity, not the loss. And remember, the opportunity we outlined already was how we feel in the face of adversity. Okay, so if you are in a trade and the trend starts to work against you, okay, you have now moved into the range of opportunity because your trade is now facing that adversity in the market. And so that is where you want to laser in your focus, and that's when you want to start really thinking critically, because that is where your problem starts. A loss is a loss. It's done. You've already sold. It's gone. It's not coming back. But in the moment, in that opportunity, that's when you really want to get those wheels turning and start thinking. Okay. So obviously, the way the process works is that our mind senses danger, which then causes a feeling of, in this case, we put anxiety, but which causes the feeling of enter emotion here, anger, frustration, what have you, right? Which then makes us act outside of our trading plan. Okay, so what you want to always remember is that the sensing of danger is a function of perception and not objective reality. Okay, just because you think that your position is in danger, just because you think the trade is going against you, doesn't necessarily mean that the trade is going against you or that your position is in danger. And what happens is our thoughts start to spiral. Okay, we put so much pressure on ourselves outside of our focus in the moment that it becomes oh, you know what? That candle didn't close where I wanted. And you know what? If that candle isn't closing where I wanted, then that means this trend is reversing. And if this trend reverses, then I'm gonna be red today. And I've already lost so much money this week that I can't be red again. So I'm gonna panic sell right now. None of that, all of that process is a legitimate sense of danger in your mind. Okay? That entire thing we just went through. But none of it none of it is objective, none of it is analysis, none of it is inside your focus. So that is how you quickly and how easily you spiral out of things, right? So now when you make that panic sell, you're reacting to your anxiety. You're not reacting to the market because the market's just ebbing and flowing. The market's doing what the market does. The market didn't do anything. The candle just closed a little wonky, or even worse, the candle didn't close at all. Or, you know, I will tell you personally that there have been times when I'm trading on the 5 minute candle, right? 2.5 minutes in to the candle, let's say I'm trading long, and then I see that candle, the body of that candle drop down, right? And I freak out. There's still 2.5 minutes left before that candle closes. So I freak out and I panic sell. And in the next 2.5 minutes, the candle works itself back up to the original level that it was at. And guess what? That entire drop just ended up being a wick. And so I just completely immersed myself in that thought spiral and I sold when I absolutely shouldn't have. Okay? So, how do we stay grounded in objective market activity instead of our own uncertainties and insecurities? Well, a lot of that is making sure that we understand our focus and our negative thoughts. Because negative thoughts are inevitable. The question is whether you buy into them. The question is whether you feel the negative thought, whether you sense the danger, and then you completely throw yourself headfirst into it and buy into it, or whether you start to analyze and pick it apart and see what's happening. Okay. So a huge part of this is recognizing your triggers. Now, the triggers are based on our insecurities, based on our flaws and our faults. Okay, so they're different for everybody. Okay, so your trigger may be a concern over profitability. It may be excitement over anticipated profits. Right. So we talk a lot about how uh, things can go bad, but a lot of times people lose money in winning trades, right? Because you get excited over how much money you could be making. And so originally you say, okay, my profit target was X amount, right? And price action has blown through that. So now you're way up. You're up more than you thought you were going to be. And so in your mind, you start thinking outside your focus and you say, you know what? I can probably make twice as much money as I thought I was going to make on this position. And instead of sticking to your rules, you let it run, and then what happens is it hits some kind of support or resistance line and then drops the other way, and now you've lost more money than you would originally have made, right? So triggers can be positive things and negative things, but basically it's anything that gets you excited, whether it be good or bad, about what you're doing in that moment that can break your focus. That's a potential trigger. Okay, and when you recognize your triggers, you can better manage them because as those thoughts start entering your mind, you recognize them and you don't give them full weight over your actions, right? So it's not the thoughts of performance that take you away from your focus, but your identification with those thoughts. So always keep that in mind. Create scripts for life changes. To trade successfully, you need to be able to break free of ingrained bad habits and patterns. So, an example of this is as children, or one example is as children, we learn to gain attention from our parents by complaining, acting up, or breaking rules. And the more we do that over time, we establish these habits as fixed roles. So then as adults, we tend to whine or act out or break rules during times of personal conflict. And so we start to realize, especially once we start getting into trying to learn something new, that what worked in our childhood, which is now a fixed role, ends up hindering us in our careers or romantic relationships or our goals as adults. So Trading requires a mind free to process data and select appropriate actions, but we no longer have that free will to process if we're mechanically reliving scripts from our past. A, a good example of this is the losing trade cycle, right? So you start off trading carefully and conscientiously, then you lose money and you become frustrated that you lost some money. So out of frustration, you start breaking rules, right? Ignoring your stop losses, changing your position size, and then what happens is uh, we start to lose even more. And so then we finally get out at a huge loss, and we feel relieved to be getting out of the losing trade because we're so stressed, right? So let's say you were down $100, and so you are feeling frustrated, so you start breaking all your rules. Now you're down $500, and now you just want it to be over because you're so past the point of clear thought that you just want it to be done. And so you're out at 500, and you're so relieved to be out at 500 that you didn't lose 1,000 that you just kind of, move on, and you're like, oh, well, at least I got out of it. And then what happens is we redouble our determination to trade carefully and conscientiously for the next time we trade. But then the frustration comes back around, and now you're back in it again, right? And I don't know about you guys, but this looks and feels to me like a bad relationship, okay? So if we can acquire scripts through our relationship experiences, that also means that we can cultivate new ones by placing ourselves in different roles and creating new experiences, right? So if you feel lazy, messy, unhealthy, joining a gym, get a personal trainer. It can help you experience more energy, feel better about getting in shape, and then maybe you'll take the initiative to clean your apartment, okay? So you're creating through new experiences and new relationships, you're writing yourself a new script. And so by enacting a new role, you experience yourself in a new manner. So this infiltrates various areas of your life. So creating the roles that mirror your desired identity for trading. So what you want to do is you want to identify the person you want to be, and then throw yourself into a structured social activity that encourages the acts of that person. So if you want to be more disciplined, take on a discipline like martial arts or getting a personal trainer. If you want to be more patient and focused, maybe you check out some meditation training, or you work with small children, because small children will definitely teach you to be patient and focused. Want to be more confident, maybe immerse yourself in some public speaking. Want to be more aggressive, join a trading room and actively participate, right? So you can work whatever you want to grow in. Put yourself in a situation where you have to work that muscle and get better at it. So if you place yourself in situations where you routinely practice being the person you want to be, you'll rapidly make that person your own, because what you're doing is you're creating situations and relationships where you're either reversing an old script or rewriting that script, or writing a brand new one and building a brand new skill or personality trait. How to build your self-confidence. Now, we've talked about this a little bit already, but self-efficacy is an important basis for self-confidence. I remember that self-efficacy is setting a goal and then working towards that goal and visualizing and believing that you can achieve that goal, okay? So how can we sustain self-confidence as traders if we cannot control whether we make money or lose money from day to day? So the key in this situation is to shift your focus from money, from the profit target, to the actual process of trading. So remember when we talked about our goals and I said, do not ever have your goal be a profit target, because that's something that's something that you can't control. There's too many factors, right? Because you can't control the market movement. I mean, there are a few exceptions to this, but most likely as a retail trader, 99.9% of the time, you cannot control the market movement, okay? But what can you control? You can control your sizing, you can control your exit and exit, or your entry and exit. You can control your risk management, and you can control your greed, and you can control how your greed affects your trades and how your greed affects your emotional mindset, and which then affects your actions, okay? So you control how you trade. The market controls how and when you'll get paid, okay? So this is why your trading rules are so important. You can't control your P&L. So you gotta keep that in mind. You can't control your P&L, but you can control whether you adhere to your trading rules, right? You can control having your focus shift from making good trades instead of making money. Because what ends up happening is if you start building your self-efficacy, building your emotional control, building your ability to work under pressure and not let yourself get rolled by emotion and sense of danger, right? And then you work on making good trades, everything else will follow. So rather than saying, you know, um, making money is the goal and a good day is when I make money, a bad day is when I lose money, you want to start thinking of every rule followed, every market traded well is a good day. It's a success in the process, okay? Because over time, profits will result and the confidence will come from self-mastery. And you want to build that self-mastery and because that's really the foundation of becoming a profitable and successful trader. So another source of self-efficacy is preparation. When you prepare your set of trading ideas for the day or week, you generate a sense of mental mastery because you are working through your process, you're seeing the different contingencies, and when you prepare, you're not under any stress, right? You you're not under any stress in the moment, so you have time to think and you have time to, if there's something that you don't remember, you're not sure about, you have time to do a little bit of research, right? And especially when that preparation includes what if scenarios that guide your decision making under a variety of market possibilities. So that's why we say, like, always have a stop loss, always have another plan. So you say, I think price and trend is doing this, and I'm going to get in when the price hits $10.05. And I've got a plan for if the price moves up to $10.20, and I have a plan for if the price drops down to $9.90. So you've got those contingencies and you know already how you're going to react to situations before they happened. And more importantly, those plans are being made level headed objectively and not based in emotion and panic in the moment. So, successful experience is a powerful source of mastery, and the mental rehearsal of trading plans under various contingencies generates a form of experience. So, again, this is all just layered. This is all just layered preparation, layered confidence, layered um, efficacy, and layered situational awareness. Okay, and this all builds a good self confidence so that you um, are less likely to freak out, right? So self confidence doesn't come from being right all the time, it comes from surviving the many occasions of being wrong. And the way you survive is by following those trading rules, following that planning, making sure that you're always prepared. So a common mistake that a lot of traders make is that many traders confuse self-confidence with positive thinking. Okay, and self-confidence isn't expecting the best; it's knowing deep inside that you can handle the worst, and you get that confidence through the preparation, through knowing that you have good trading rules and you're going to follow those trading rules. Okay, so things that the self-confident trader does or knows, right? A self-confident trader can see a stop loss and know he'll be okay if it's triggered. Okay? Stop losses do not freak out self-confidence traders because they're all part of the plan. Okay? And because of that, they know that loss is also part of the game. And they understand that some of our best market information comes from trades that don't work out. Again, sources of opportunity, trades in adversity. And you go back and you journal and you pick it apart and you see what happened and you see, was there something I missed? Was there something I did? Was there something I wasn't thinking? Was there something that I thought that I laid credence to that I should not have and that took over how I was acting, right? So self-confidence isn't cockiness or looking at the world through rose-colored glasses. And this is kind of a big thing with traders because cockiness is something that's very easy to let yourself feel, especially if you've had a streak of wins, right? If you have a streak of wins, you think you're untouchable. And so you got to make sure that you don't let that become a part or an attributing part of your self-confidence because when you eventually have trades that go against you, which you will, that that cockiness turns negative really quick. And now, um, where on a win and you're reflecting or you're expressing cockiness, um, so that what's being reflected back to you is positive. But if that cockiness becomes self-criticism, then what you're putting out is self-criticism, and what's being reflected back to you is hurting you, is hurting your mindset. Okay. So self-confidence is the quiet sense of I've been here and I can handle this. Okay. So as your own self-coach, you must continually generate your own positive trading experience. So that's planning and rules keep us from traumatizing ourselves, and that's really what it is. I tell traders all the time that being a successful trader isn't about making money. It's learning how not to lose money, how not to traumatize yourself, which is why we have such a low success rate in this industry, because people fail to plan and make rules, and then they traumatize themselves. They lose their life savings in the market, and then all of a sudden this market is this big evil thing, or this market is gambling, or this market is dumb. And it's no fault of the market. It's a fault of not having a plan, not having rules, not having the right emotional mindset, um, not having the right influences on your surroundings and your self-confidence. And then what happens is you traumatize yourself. Okay. So when we're traumatized, we create a deep emotional connection between trading and loss. And this completely undercuts your self-confidence. If your go-to for trading, if your go-to thought of trading is, oh man, I need to not lose money today, that's devastating to your self-confidence, which is going to ripple into everything else you do and everything else you think as you trade. So we should be creating emotional connections between trading and self-efficacy. This grows our self-confidence. So set goals, see yourself working towards those goals, accomplishing those goals. Enough small incremental goals attribute to self-mastery, which then builds self-confidence, which then helps build emotional control, and that's what helps you grow, right? So the best experience to help self-confidence is a success in the face of adversity. So we see that we've kind of talked about this already. The rules and discipline matter most when you're in the hole, because again, when you're in the hole, you're being faced with what is, right? If you are up on the day or you are green, you are reveling in what could have been. But when you're red, you're red. You're in the hole. You are getting slapped in the face by everything that went wrong, and you are being forced to face what is. So ideally, you want to give yourself the opportunity to dig out of the hole by not exiting the trade prematurely, which goes back to what we talked about, our brain's recognition of danger. Okay, so you want to not get out of the trade prematurely because you need to have time to analyze and see what you're doing and what it actually is happening, and if that sense of danger actually is danger, or if that's just your brain processing an emotion, and you need to pick apart that emotion, pull the information out, and then analyze it, right? So you want to give yourself the opportunity to dig out of the hole by not exiting the trade prematurely, but also not allowing the losing trade to move so far against you that it creates a trauma. So you've got this line, right? And for most of us traders, that line is between our entry point and our stop loss. So if you're in your entry point and your trade is somewhere between your entry and your stop, that is when you need to start evaluating, right? But as soon as it hits your stop, you're out, because basically your stop is setting your trauma limit. So you say, this is the most amount of risk I can handle in this trade, in this position. And so in order for me to not start linking trading with negative thoughts and negative emotions and trauma, this is the level that I need to get out at. And every planned and measured loss is an experience of control. So everything in this market is about knowing what you can control, knowing where you can flex on your control, and then relinquishing the the thoughts of trying to control the things that you can't, right? Because if you keep trying to control things that you have zero control over, you're going to blow up your trading account, you're going to drive yourself nuts. But if you exert extreme discipline and preparation over the things you can control, you're going to build good self-confidence, good emotional control, and a good sense of self-mastery. Every drawdown you battle back is an experience of mastery. And I'll tell you 100%, for me, I always feel better when I have a trade that goes against me, but I'm able to think through it and I'm able to bring it back and break even, or even bring it back and be green, right? And those trades always make me feel better than just trades where I buy in and they just automatically, price action automatically runs in the direction of the trade and I just make money. Because the automatic win, again, could be attributed to getting lucky, even though you have preparation or even though you have a trading plan. But when you're down and then you battle that back, so you are break even or you cut a huge loss, that means that you asserted kind of everything we've been talking about through this whole video. That you did not freak out, that you stayed rational, that you kept emotional control, that you stayed with your trading plan, all that, right? And so that's a great experience, and that's a great positive experience of mastery. It may be a losing trade, but it's a great positive experience towards your self-confidence. So really, this all kind of boils down to, you can't control whether you win or lose, but you can control how much you lose and how you lose it, right? So you want to make sure that you are following your trade rules, that you're prepared, that you've got everything in mind, so that way when you lose money, you're losing it on your rules. It's not being taken from you, and that's a huge thing to keep in mind, because that is a huge contributor to building positive self-confidence. All right, so we kind of now we're kind of at the end of this this part one video about change in the daily trading coach. So we're just going to kind of go over the 5 best practices for affecting and sustaining change in this part. So change has a particular structure and sequence, right? And there are factors that aid it as well as factors that impede us. And we've talked about this, where when we want to change, there are things that will help us be successful in our change, and then things, whether we know it or not, that will hurt us in that pursuit of change. So here are the 5 most important change elements that will affect your self-coaching. Timing and readiness. Timing is everything. You're not going to change unless you're ready to change, right? Unless you recognize that something that you want is no longer a want, but it is a need. So how do you create that mindset of realizing that it is a need? And that's through incremental positive efficacy, right? And that puts you in the mindset to change and puts you in the mindset of realizing that these things that you want to adopt and these things you want to change are needs and not wants, and they're things that you're going to do every single day, and they're things that are going to become a part of your daily routine and become second nature. And so by becoming emotionally connected to the consequences of our behavior, we cultivate that need for change. But again, it's that positive emotional connection. We don't want a large-scale trauma. We want incremental growth, incremental goal creation, incremental positive efficacy that creates a sense of mastery. And that is what is going to cultivate that need for change. Ready, steady, go. Don't try to make too many changes at once, right? So this happens a lot when traders are first starting out and they're brand new, because there's a lot of things that you need to kind of get a hold of before you really should start trading. And a lot of traders try to learn everything they can in a week or a month before they jump in, and then they end up drowning and they water down their focus and they never accomplish anything, and they just end up blowing up their account. So what you want to do is you want to make a list of 5 specific changes and then number them 1 to 5, and then select the one you're most ready to change right now. So you work on that one goal intensively every single day until you've mastered it and you can sustain a mastery of that goal, right? And then you move to the next one. And what's going to happen is the positive emotional control, and the positive mastery and the positive self-confidence that you're going to build in that first change is going to transfer over to the next goal that you want to make. And then once you complete that one it'll transfer to the next goal and it'll just get larger and larger and larger. But you will be building mastery correctly, right? Double down on your goals. So when you make a desired change, don't let up. This is the antibiotic kind of example, right? So when you go to the doctor and you're sick and he gives you antibiotics and he gives you a 14-day supply of antibiotics, you start taking them for 5 days and you start to feel better, so then you stop. And the doctor says, no, you have to make sure that you take all 14 days because that's how we make that change in your body. Same thing when you're working on a goal. If you're working on something and you make an initial improvement, you want to focus and then redouble your efforts and continue plowing along in the direction of that goal as hard as you can. Because the enemy of change is relapse, and the way you fight that relapse is to implement that goal every single day and keep working at it, and don't let up until it becomes second nature. And just remember that any change worth pursuing is worth doing 30 times in 30 days, right? And so even if it's something, because we talked about both mental and physical changes, but you want to make sure that you're bringing the body in. And if you're not 100% sure that you're going to be okay with it mentally, once you put the body in practice, the mind will follow. So if you're not really sure, just start journaling every day, right? That's a physical act. You want to just start journaling, and then eventually your mind will join you and will start to kind of fall in line there, right? So successful coaching means working as hard at maintaining changes as initiating them. Stay active. Change is most likely to occur when you're active in its pursuit. So don't just talk about new things, don't just think about new things. You want to actually start doing them and implementing them in your process every single day through those small incremental goals. So there's a joke that traders approach coaching like many people approach church. You know, they go once a week to feel virtuous, and then they forget about it the other 6 days. Well, in this case, if you want to espouse to the religion of virtuous trading, right, or successful, profitable trading, you want to live those beliefs every single day. You want to be working toward those goals every single day. And each goal should be accomplished by completing specific daily activities, right? So you're just reinforcing, again, that positivity, that self-confidence, that mastery, all that, and you're just kind of building that, and you're layering it all on top of each other as a foundation for your trading. Because you won't change your behavior just by changing your mind, just by thinking of an idea. So you'll start thinking differently once you enact your new behavior patterns. And that's usually, again, daily through daily incremental change. Stay positive. If it ain't broke, don't fix it. Oh, that's our second catchphrase of the video. If it ain't broke, don't fix it is a mindset for failure. The best times to coach yourself is when you're trading well, right? So if the best times for self-efficacy is when you are trading an opportunity in adversity, well, the best times to coach yourself is when you're trading well and when you're in the green. Because again, coaching is not just about not repeating failures and growing weaknesses, but it's about repeating strengths, and it's about repeating and enabling your strengths. And the best way to do that is to make sure that you are coaching yourself when you're doing well, so you know what you're doing well, right? So your goal isn't to change what's working, it's to become more consistent in your efforts. So you have a green day, you pick it all apart, and you say, you know what, I did this really well today, or I made sure that I what have you. Let's say I made sure that I bought right on the 9 EMA because that was what my strategy requires, and I did that really well today. So you say, I'm going to make sure that I'm going to be consistent on buying in that same spot on the 9 EMA because that is where my strategy has the most amount of success, right? And so that's what you want to become consistent in. So something that comes hand in hand with that cockiness we were talking about was sitting on your laurels. So sitting back on your laurels when you're making money is going to bring you comfort because it's easy, but it's not, it will not elevate you to that elite level of success. And that's why, we say every single trader has goals. Every single trader is working towards their goals. Now, as you grow in trading and as your mindset starts to change about your trading, your goals may change, but that doesn't mean that you're putting a lesser amount of work into it, right? Okay, so those are the 5 best practices for affecting and sustaining change. So just kind of a recap in general of this entire change section, right? So the best traders make self-improvement a way of life. They are driven in their work lives, their physical lives, and their recreations. They derive great meaning from being the best they can be, which is that continual change, that continual growth, that continual self-mastery and emotional control. Okay. And when changing is a lifestyle, we see exemplary performance. And at that point, self coaching and daily coaching becomes a life philosophy, an organizing principle, not just a discrete activity among many during the day of the week. So, again, this is something, this change needs to become second nature, something that you just do all the time so that way you're continuously fueling that self efficacy, fueling that self confidence, fueling that mastery, and just creating positive change and positive growth in your life as a trader and in your trading journey. Okay. So again, this is part one. Part two will be coming soon. But if you wanna read more, this is the book, The Daily Trading Coach by Brett N. Steenbarger, 101 Lessons for Becoming Your Own Trading Psychologist. All right, thanks everybody. So like I said, part two will be coming soon, so keep an eye out for that.